June 12, 2022. A date that echoes through the corridors of cryptocurrency history. On this fateful day, panic ripples across the digital financial world. Celsius Network, a titan of the crypto lending space, abruptly freezes $12 billion in customer withdrawals. Horror spreads like wildfire as investors watch helplessly, their digital fortunes locked away. The virtual world trembles under the weight of a single shocking announcement. Due to extreme market conditions, today we are announcing that Celsius is pausing all withdrawals, swap, and transfers between accounts. It is a cold, formal statement that shatters trust and obliterates dreams. The empire that promised to transcend traditional banking is now teetering on the brink of collapse. This is the moment the Celsius promise begins to unravel, foreshadowing the downfall of its controversial leader, Alex Mashinsky. To understand how we arrived at this dramatic juncture, we must rewind to 2017, to the genesis of Celsius Network. At the helm is Alex Mashinsky, a visionary with a rebellious streak. Mashinsky, an immigrant from Ukraine, built his reputation as a tech entrepreneur in the 1990s, dabbling in voice-over IP technology and transportation networks. His passion for innovation was palpable, his charisma undeniable. In 2017, alongside CFO Yaron Shalom, Mashinsky founded Celsius Network with a bold mission: to unbank the world. Celsius promised a revolutionary model where users could earn high-interest yields on their cryptocurrency deposits while borrowing against them with ease. It was a seductive vision in a rapidly evolving digital financial landscape platform, lured by the promise of liberation from traditional banks, which they saw as relics of the past. By 2019, Celsius was flourishing, its assets swelling as crypto enthusiasts bought into the dream of a decentralized future. The dream reached its zenith as Celsius amassed $20 billion in assets under management, boasting a staggering 1.7 million customers worldwide. Each month, the platform's allure grew stronger, fueled by promises of annual percentage yields as high as 18.63%. Investors, both retail and institutional, were spellbound, drawn to the potential returns like moths to a flame. High-profile endorsements added a sheen of legitimacy. Roni Cohen-Pavone, the chief revenue officer, tirelessly expanded the network's reach, while celebrities lent their voices and faces to the burgeoning brand. The company seemed unstoppable. In the frenzied world of cryptocurrency, Celsius was a lighthouse of prosperity, its name synonymous with innovation and opportunity. But beneath the surface of euphoria, storm clouds were gathering. Unbeknownst to its legion of believers, Celsius was precariously balanced on the fragile line between innovation and overreach. As the market shifted and cracks began to appear, the world would soon witness a monumental fall from grace, driven by the very leaders who had once promised salvation. Celsius Network's business model, heralded as revolutionary, was inherently flawed beneath the surface. The company's promise of high returns relied heavily on speculative investments in risky DeFi protocols. As the 2022 crypto market began its volatile downturn, the cracks in this facade widened
to prop up its value. Internal warnings about these dubious practices were disregarded, and the writing on the wall was ignored until it was too late. With investor confidence faltering, customer withdrawals surged, panic spread like wildfire, and the system could no longer withstand the pressure. On June 12, 2022, Celsius froze customer withdrawals, a stunning move that sent shockwaves across the crypto world. Just a month later, the company filed for bankruptcy, revealing a staggering $1.19 billion deficit. The Department of Justice launched an investigation, and by July 2023, former CEO Alex Mashinsky was arrested. In court, faced with mounting evidence, Mashinsky pled guilty, and in May 2025, he was sentenced to 12 years in prison. On June 19, 2026, the Commodity Futures Trading Commission dealt the final blow, permanently banning him from all trading activities. With that, the tumultuous saga of Celsius Network reached its conclusion. For crypto investors, the rise and fall of Celsius Network serves as a sobering reminder of the perils hidden behind promises of too good to be true yields. This case illuminates the growing need for comprehensive regulation within the cryptocurrency sphere. Before we wrap, if you want to actually take control of your finances the right way, check out Rocket Money at rocketmoney.com. It's helped millions of people track spending, cancel hidden subscriptions, and build real wealth without the risk. As the regulatory landscape shifts, the lesson is clear: due diligence and skepticism are invaluable allies in the world of investing. For more insights into the ever-evolving world of finance and innovation, don't forget to subscribe.